I want to explain to you how to make a profit and loss statement this year, okay? And if you have a small business or a large enterprise or even anything in between, knowing how to prepare a P&L is going to help you big time because a profit and loss or income statement is one of the most important financial reports that you are going to need when you talk to investors, when you talk to lenders, when you talk to regulators, or what have you, okay? Now, one thing I want you to really understand here is that I first want to explain to you what a profit and loss statement really is, because before we get into the nitty gritty, it's important to understand the theoretical concept. So, a profit and loss statement, also known as income statement or statement of income, is actually let's say an evaluation. That it's an assessment of how much money your business is making. So, I want you to consider a profit and loss, a financial health checkup for the state of your business. And you can actually do this every month, every quarter, every 6 months, or every year. It really depends on how often you want to evaluate if your business is doing well or not, okay? An effective profit and loss statement will take into account your operating expenses, business incidentals, and revenue gained through the year or even quarterly, okay? So, or even yearly, like I said. So you have to think about on one side you have expenses, on the other you have revenue. Okay, and now when I'm calling business incidentals, those are called. If you want to go a little further, they're called extraordinary items. Okay, those are things that do not relate to your business, but also have an effect anyway on your business operation. So if you are new to small business ownership, creating a profit and loss statement can certainly seem discouraging, but I promise you, you will not need actually like a complex software or even complex knowledge or even advanced knowledge to actually create one. When tax season rolls around, you want to know where you stand, how much money you are bringing in, how much you are spending, right? So basically, you're speaking about your cash inflows and cash outflows, and whether you are covering your tax obligations. So the thing is, creating a profit and loss statement, it's not just for investors, regulators, or whatever, but it's also for authorities. The IRS want to know how much you're bringing in. You better have a pretty compliant, a pretty thorough profit and loss statement. So by tracking your income and expenses, your profit and loss statement can help guide your small business towards a successful future, especially if you do it the right way. Now, I want to go a little further here. What a profit and loss statement can really do for your small business this year. What kind of benefits can you derive from preparing a P&L? Again, I want you to really prepare a compliant P&L, a P&L that complies with U.S. GAAP or IFRS. U.S. GAAP, United States Generally Accepted Principles, or accounting principles, or International Financial Reporting Standards. Okay, a profit and loss statement can be a huge help in growing your business. And for example, you are able to track business performance, you are able to secure further funding, you are able to stay ahead of tax season. Let me break it down a little more. When I'm talking about tracking business performance, I'm really talking about you going as going as granular as possible. This may seem like a no-brainer, but the biggest impact a profit and loss statement can have for your business is simply showing you how things are going. You can use the info from the profit and loss statement to actually help you set your pricing strategy. You can tell whether you're making money or not, to show you which of your various products or services are the most profitable, and to help you predict upcoming needs in your business forecasting. So if every quarter or every month or every year you engage in forecasting or budgeting, having a P&L can really help you big time. You're able to use a P&L to secure further funding. So if you want to reach out to a bank or credit union to actually get let's say a business line of credit or a business loan, having let's say a profitable business can help you. And how can you really show whether you're profitable or not? Well, by actually preparing a profit and loss statement. So whether you're looking for investors or a small business loan, you will need solid financial statements to prove that your business is actually worth the risk. So a clear outline of your business profits versus losses can really highlight the strengths of your business operations and give lenders an accurate assessment of your finances let's say over a month, over a quarter, or over a year. You can also use a P&L to stay ahead of tax season, okay, so that you do not have to have like the IRS knocking on your door to do an audit or whatever. Now, profit and loss statements can help you make sure your business is appropriately assessing your tax obligations. Even if your business is what's known as a pass-through entity, meaning you'll pay those taxes as part of your personal taxes, your profit and loss statement is an important part of that calculation. So a pass-through entity is an LLC or an S corporation, for instance. So now let me really go into the nitty-gritty here. How do you create a profit and loss statement this year? So the first thing you want to do here is to calculate your total revenue. If you remember, I told you that a profit and loss statement actually incorporates revenue items and expense items. So we are going to start with the revenue part, the cash inflow. Okay, so you want to calculate your total revenue. Has it been a slow year, for instance? Maybe your seasonal sledding business is just waiting for the first snowfall. Even if you are in the black and making money hand over fist, you will need to accurately gauge how much you are bringing in on the goods and services you have sold. What I'm trying to say here is you just want to know what's really happening liquidity-wise, what's really happening cash-wise. Are you bringing enough? Are you bringing not enough? You have to really have a clear idea. And your total revenue includes all the money you have made by operating your business. It includes all your sales or earnings before interest and taxes, but not loans. You can import those figures into an Excel spreadsheet to aggregate your data manually, or you can use software like QuickBooks, like Wave, like Xero, like Quicken to actually track your business finances and generate the profit and loss statements automatically. Next, you want to determine your cost of goods sold. So after calculating your total revenue, you want to determine your cost of goods sold. Your cost of goods sold, or COGS, refers to the money your business spent to acquire, create, and sell your products or services. So if you are selling baked goods, for example, your COGS actually includes things like the ingredients you use and your means of delivering them. So to calculate your COGS, there is a basic formula. You want to start with your beginning inventory. You want to add your purchases and then subtract your ending inventory. This will equal the cost of goods sold. Okay, so that's important from an accountability point of view. Now, if you're selling services, there is a different formula, but it's pretty similar. If you have any question, let me know in the comment section, and I'll certainly I will expand on this topic further. Next, you want to add up your other expenses. So your cost of goods sold actually is one expense category. This is actually the cost that you are actually incurring to sell your goods or services. But you probably have administrative expenses as well, such as payroll, such as utilities, rent, and so on and so forth, right? So the good news is that your business expenses are generally tax deductible. Not just your cost of goods sold, but other costs too. So do you run marketing campaigns on social media, business expenses, hire a web designer to optimize your domain? That's an operating cost too. Paying your employees, another cost of doing business. Depreciating your assets, yep, that's that too. So you have a constellation of expenses that you can really deduct, and the IRS allows you to really write off those costs, okay? So these are all expenses business owners need to account for, and they all affect your bottom line. So expense tracking is crucial. So are you accounting for expenditures as efficiently as possible? That's a good question to really think about this year. And next, you want to after adding your ancillary expenses, you want to figure out your gross profit. So you want to subtract your total expenses, including any cost of goods sold, from your total revenue. Remember, if this all feels overwhelming, there are apps that can help you manage your business finances and that to actually do most of this for you. Okay, like I said, QuickBooks, Quicken, Xero, Wave, and so on and so forth. Next, you want to determine if you are making a net profit or loss for the season. Again, the season can be a month, a week. It can be a quarter. It can be six months. It can be 1 year. Okay, so your net profit is what you get to keep after paying taxes on your gross profits. Remember, new businesses usually take around 3 years to start making money and operating in the black. In fact, many successful businesses start out as a side hustle until the business owner can earn enough to support themselves financially. So that's an important element to think about as you're preparing your P&L statement this year. So now that you have your P&L statement, how do you analyze that report? I want to explain to you really quickly how to analyze your P&L statement. So to learn about your business from your P&L statement, you want to start with the income at the top. When you list out your income streams according to your different products and services, you can start to see how much money you are making on each one. That gives you a feel for where you should spend your energy and where you might be leaving money on the table. It's all about allocating the proper resources: logistical resources, financial resources, operational resources, human resources, where you need to hire maybe more staff. Okay, so that's actually for the analysis on the profit side of things. Then I want you really now to look at the expense side of things. I want you to look through your cost. Is there anything you can cut back on? Is there room to start paying for that one app that would make your life easier? Right? It's one of those things where you always have to see what works for you and what doesn't work for you, and what is scalable and what is not scalable. It has to make sense from an economic point of view. Otherwise, you're just wasting time, you're wasting money, you're wasting resources. Okay, and so now one thing I want to say here is that some business owners jump the gun a bit, paying for big business services they might not need yet. Others have trouble getting off the ground because they don't want to pay for the things they really need to grow. So a profit and loss statement lists it all for you. So it's a great place to start when you are trying to evaluate your, let's say, your business operations. Okay. Another way to see the value of a profit and loss statement is to actually generate it over different time periods. So what did the statement look like last month? How about the month before? The more profit and loss statements you actually you look at, the more comfortable you'll be getting ready in terms of like tax season or even profitability analysis, and the more you will learn about your business. And over time, the good thing is over time, those P&L statements will be a huge help in watching your business grow. If you keep good records, you can compare your growth, your sales, and profit, let's say from day one, monitoring pain points or bottlenecks, and even forecasting future growth. So that's an important element to think about, especially from an accountability point of view, from a chronological point of view, but most importantly, from an accountability point of view. So an accountability point of view, scalability point of view, and a chronological point of view. When you analyze your profit and loss statement, you can also see whether or not your business is working for you, right? Because the whole thing here is that owning a business is not just a hobby. When you think about it, it's a lot of work. It's a lot of work. You pour your heart and soul into it because it's your passion, that's for sure. But you got to make sure that the numbers actually add up too, because otherwise you'll be wasting a lot of time, a lot of energy, right? Losing hundreds of thousands of dollars in some cases. So when looking at the finances of your company, you want to consider how you value your own time as well, because you are the owner, you are the founder, but you're working big time too. You're probably working sometimes more than 100 hours a week. Yeah, I've seen those. Okay. So in many instances, small business owners don't pay themselves, especially in the first year or two of operation. So if you need to make ends meet in your personal life while operating your own organization, your profit and loss statement can help you determine a reasonable salary for your efforts. So is there any other financial reports you might need? Well, yeah, of course, because when you think about financial reports, you're thinking about one out of three main financial statements. Actually, there are four, but the last one is not really that popular. But the other two that you want to really think about are balance sheet and also cash flow statements. Now the fourth one is actually the statement of owner's equity, but that one is not really popular in the sense that some industries don't even allow you to have that. Okay, so along with profit and loss statement, balance sheets and cash flow statements primarily can help you get a solid picture of your business's finances. And so while those additional financial reports are ultimately necessary, they are actually tougher to put together on your own because with balance sheets, for instance, you have to really account for assets. You have to account for liabilities. And when it comes to assets, for instance, fixed assets, primarily like those long-term assets, you have to really think about depreciation. So that really calls for some kind of advanced knowledge of accounting. And if you're not really, if you don't have a PhD in accounting, or you don't have even a master's degree in accounting, or even if you're not a CPA, they can be a little more complicated than preparing a P&L. So I want to finish this conversation with a topic around passion over profit. See, the whole thing is that when you prepare your P&L statement, that really gives you an idea about how you allocate your time and whether or not this venture is really worth it, right? Because the P&L will tell you whether or not you're bringing more cash in, like more cash inflow than cash outflow. And so if the venture is worth it, then you can really keep doing it. I mean, historically, businesses don't start making money until year 3 or year 4, and in some cases year 5. So if you can survive the first 3 to 5 years, then it's really worth it, right? But again, at the same time, you're not going to really you're not going to find the proper metrics if you don't prepare actually a P&L. That's important. So it's no secret that people start their own businesses because they are passionate about their craft. So if you think about record producers, artists, chefs, these industries can be lucrative for some and pay actually and a pay cut for others. So as long as you keep operating your business and enjoying it, that's real freedom in and of itself, right? But you gotta really look at the metrics. You gotta look at the numbers and make sure that you're not really bleeding too much cash. If your business hits a rough patch, remember that Apple was plummeting in the mid 80s and Steve Jobs was ousted, only to be rehired a decade later to dominate the market, right? So you're gonna have those peaks and valleys. So just be aware of that. And bankruptcy actually loomed for Adidas in the early 90s. Now you won't find a soccer pitch without Adidas gear on it anywhere on the globe. So it's all about resilience. It's all about knowing the numbers. It's all about having a passion. But most importantly, it's all about having a vision. So by running your financial reports regularly and keeping a close eye on your operations, you'll be in good shape to react quickly, let's say, to market changes and take advantage of new opportunities as they come along. And you know what? This industry, every industry, not just one particular industry that the industry you're in, but every industry, the whole economy. You saw what happened a couple of years ago with COVID, right? Who would have predicted that COVID would happen? It happened, and those industries, those companies that were resilient, those industries, those companies that had a clear eye about their P&L, they survived, and the others, they just disappeared. So in closing remarks into this conversation, I explained to you how to make a profit and loss statement for a small business. I explained what a P&L is, how do you create one, how do you analyze your own P&L, and now the closing remarks. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.